I'm Michael Brown, Senior Reporter at The Deal, and I'm joined today by Brent Gledhill, Managing Director and Head of Investment Banking at William Blair. We're here today to discuss some M&A trends in 2014 and look forward to 2015. So Brent, thanks for joining us.
Nice to be here.
So in 2013, going into 2014, the equity markets were strong. How did that affect strategics' appetite for M&A?
We came into 2014 with a very healthy strategic appetite, and off the back of that surge in markets in 2013. Markets up 30%, really put into play in boardrooms the question of how will I grow into this multiple? How can I support it from a growth standpoint? Organic growth has been slow and certainly challenging, so we've seen that translate into finally opening up again. I'd say finally after a 3 or 4 year hiatus, seeing strategics come very actively into processes looking to buy growth, and that's continued through the year. Private equity has also become much more active as the year has gone, and so now it's really both parties, both asset classes, whether it be strategics and private equity, competing aggressively here at the end of the year.
Great. Now, where does that leave private equity in terms of the second half of 2014 and going into 2015?
I think private equity is really as healthy as it's been, certainly in 5 years, and maybe as healthy as it's been even back to 06, 07. Very well capitalized. They've had some very good returns, and actually they've used the equity markets very tactically, which hadn't been the case 5 years plus ago. So what you've seen is liquidity for the private equity funds has really been apparent and been very accessible, and that has led to then a recapitalization of that asset class. So what we see is a very active and healthy private equity community coming at transactions, often with a specific view that gives them an advantage, yet a strategic community that is very engaged. It's given us an opportunity to take clients out and let them test both waters to make sure that they have the optimal outcome. We've also seen in light of that, or maybe as a subset, that the US market is really the prime market, prime target now globally, and feels like it will be the next 24 months.
All right, great. Now, do we expect any particular sectors to be particularly active in 2015?
Yeah, the sectors for 2015, healthcare, technology are again continued strong areas. We think energy will continue to be a strong area, even with the commodity price changes. And the fourth category would probably be consumer. It's had its pockets of added energy and added excitement this year. To the extent we get some wage growth in the middle class, we'll see consumer take off and become a very healthy sector and active sector for deals.
Great. Thank you so much, Brent.
Sure.
I'm Michael Brown in New York, and that's The Deal.